and welcome to BQ Pram. I'm Hiral Dadia. There is major pressure that is built in terms of where markets are concerned in today's session. If you see Nifty, 17,555 is where it's trading at. We're seeing cuts of almost 270 points coming in there. And in terms of the Sensex as well, major cuts coming in due to the likes of a Reliance, HDFC Bank, ICICI Bank, as well as an HDFC, wherein almost a 900 point cut is what we've seen in terms of Sensex. So clearly, there are concerns. Investors are worried about, what could be coming in from the US Fed's minutes, as well as you have the RBI MPC minutes that are slated today as well. To discuss from a technical perspective what one should be doing with these stocks, from a today's session perspective, joining us on the show, overall, what we should be doing, we have Ajit Mishra as well from Religare. Ajit, welcome to the show.
Good afternoon, thank you.
Ajit, my first question coming to you is a 900 points cut in terms of the Sensex, as well as if you see the kind of cuts we've seen in terms of Nifty 50 as well. What are charts indicating?
So, yes, see, the tone was anyways negative from the last 3-4 trading sessions. We are seeing that index was gradually drifting lower. But after yesterday's, sharp dip in the US markets, we are finally seeing, serious dent in this entire recovery phase. Because if you notice that in the beginning of February, we started this recovery after making the lows close to around 17,300 levels in the Nifty, and we inched toward 18,200 mark. But in last 4 trading session, we have engulfed almost 1/3 of that entire gains. And we are again, trading closer to their major long-term moving averages, both in terms of Nifty and the banking index. And banking is anyways, was underperforming, and we are seeing pressure across the sector. So all these factors put together are indicating that yes, the tone is likely to remain negative. And earlier, we had the comfort of the US markets trading in a range. So somehow we were taking that comfort. There could be a possibility of a breakout. But after this sharp decline, indications are more in the favor that this negativity might extend further, and any rebound in the market may result into further selling pressure.
Right. So overall, what should be the key resistance and support level that we should be watching out for in terms of Nifty?
Yeah, so close to around 17,400, 350, the previous swing low should be the next crucial support, and then next major could be closer to around 17,200. In case of recovery now, 17,800 to 900 zone is going to be very strong resistance for the Nifty index. Banking index, since we are almost trading closer to the 200 days of exponential moving average, which is close to around 40,000 mark, we are already at the crucial level of support. In case if it fails to hold the swing, then 39,500 and maybe lower could be the level that we might be testing. In case of recovery, 40,500 to 41,000 zone is going to be the strong resistance for the Bank Nifty in days to come.
Right. So that's with regards to Nifty as well as Bank Nifty. Now, talking about individual counters in today's session, clearly, it's Reliance Industries which has been putting the pressure. In fact, this morning also I was having a conversation that in the last 1 year, Reliance Industries has been stuck in a range. It's not really seen a major breakout that has come in. Taking the lows that we are at right now, what are charts indicating? Do you think a good time? Do you see strength picking up?
So yes, it's almost like a year, we are hovering in this band of close to around 2,300 to 2,715 Reliance Industries. It tested the lower band of late, and then we had this marginal recovery towards 2,450 mark. But again, we are seeing, correction or profit taking, you may call. So I believe that the tone is likely to remain subdued in the stock, because we are closer to the support area. So the risk to reward is not favorable to go short. But at the same time, for fresh buying also, the market is not very conducive. So be it Reliance or some of the IT majors, which were earlier playing catalyst role in capping the damage when the banking index was feeling under pressure. I feel that it's prudent, especially in the market like this, is to restrict your position and let this selling pressure cool off. And similarly for the Reliance also, close to around 2,300 mark, one should reevaluate whether it's going to hold this level or not. Otherwise, it's prudent to stay away.
Right. And overall, if you see, apart from the Reliance Industries, you have HDFC Twins as well, which is putting a lot of pressure, ICICI Bank, which is putting a lot of pressure, and financials overall in the last 1 month have started to see some bit of a sell-off that has come in. So from a F&O perspective as well, the kind of open interest additions we're seeing, as well as charts, what's your view?
So yes, see, in this entire recent decline, banking was the major culprit, and prior to a couple of sessions ago, the SDFC twins were not participating. In fact, the Bajaj twins were also not participating. But in today's session, we are seeing that they are almost aligned to the other banking and financial majors. So indications are not great, and that's the reason why we are saying that there's a possibility of further decline. So both SDFC twins, Bajaj twins, they are indicating that this negative tone to continue. In fact, the other private banking majors like ICICI Access, they are also slipping below the long-term moving averages. So indications are not that great, but it's just that we have already seen decent correction. So there could be a bit of breather in between, but the tone is likely to remain negative.
Right. And overall, if you see in terms of a Bajaj Finance as well, we are seeing some bit of open interest shedding that's happening, right?
Yes, so means after this, recent rebound, it was a very sharp rebound from 5,600 to 64, 6,500 levels. But after hovering in a very narrow band, it has finally witnessed a breakdown. So in fact, one can look for going short also, even at current levels in Bajaj Finance after this consolidation breakdown, because closer to around 6,030, 6,000 could be the area where it might test. And your stopper should be at 63 then in case if you're shorting Bajaj Finance at current levels.
Right. Apart from this, in terms of other counters, you have a GSW Steel as well, which is down almost 2.5-3% in trade today. What are charts indicating on this one?
So, in fact, within the metal space, JSW Steel and Jindal Steel, they are the two names which have been outperforming. They were trading around the record highs. Everything like positive, we were seeing in both these stocks. But in line with the correction in the metal pack, now we are seeing a gradual, profit booking in the top performing names also. But still, the trend is not reversed yet, especially for JSW Steel, Jindal Steel, because they are still, holding above their long-term averages. But yes, short-term bias looks slightly, negative to us. So in case of somebody is having any position, they should book profit and let this stock, retrace towards 670, 680 zone to re-enter.
Right. Overall, if you see in terms of NTPC, now that was one of the counters which was the top gainers in yesterday's session. Today we are seeing cuts of around 1.5% coming in there. There was some bit of interest coming in on an NTPC as well. Do you see further buying interest from here on? Should you enter?
Yes, so in a market like this, Cyril, wherein we are seeing excessive, volatility at the same time, the high beta counters are, witnessing excessive pressure. So these low beta stocks are definitely a good place to hide in. So NTPC, Petronet, Power Grid, these are some of the names wherein we are seeing buying interest, and we believe that in case if the market trend deteriorates further, NTPC is likely to hold 165. So the risk reward is favorable in case if somebody is looking for any buy position. One can even, in fact, create fresh longs even with the current levels with 165 as a stop. And positionally, the record highs close to around 180, 85 zone. That should be our positional targets.
Right. So that's with regards to where NTPC goes. Overall, at least in terms of IT counters, right? From a fundamental perspective, yes, there was a lot of negativity, but the commentary from the management has really turned. Overall, there has been strength that has come in terms of IT names as well in the last 1 month. So clearly, it seems there has been a transition that's happening or a rotation that's happening from the banking counters to the IT names. Anywhere that you see value and strength, from a large cap as well as a mid cap IT stock?
Yes, in fact, if you see that entire, recovery phase, though we have had phases of intermediate consolidation in the IT majors also, but of late we were seeing very distant and consistent trend wherein the IT majors like TCS, Infosys, HCL Tech, they were performing well, and then we had stocks like Persistent, Coforge, Emphasis participating in the move. In the last couple of sessions, in line with what we are seeing in the US Tech Heavy Index, similar kind of pressure is what we are seeing. But still, we see comparatively better structure, when it comes to the IT majors. So stock like TCS, Infosys, definitely one can look at accumulating these stocks. persistent, we are anyways not seeing any major correction. So any dip consolidation can be considered as a buying opportunity in persistent as well.
Right. And apart from that, any other counters do you think which are on your radar right now from tomorrow's perspective?
So he did see mostly stocks are reeling under pressure, but a couple of stocks they are still holding strong. And one such stock is IEX that after almost a year-long corrective phase, we have seen a base formation around the major moving averages, and now we are seeing decent uptick in the volume also with the price rise. So we believe IEX could be one candidate which one can look at to accumulate in the market like this. Near term, yes, it may take a resistance around 155, which is the long-term averages resistance. But if the view is, let's say, for a week or two, then we can expect higher levels. In the meanwhile, since the market tone is negative, do maintain a stop at 139.
Right. Overall, if you see in terms of, I mean, we're pretty close to expiry as well now. Tata Motors, from a Feb futures perspective, what's the call that you would have? Because again, there is some bit of strength that we are seeing in terms of Tata Motors as well.
Yeah, that's true. In fact, the auto space, if we exclude a couple of names like Hero Motoko, wherein we are seeing sideways negative bias, most of the stocks were doing well. So Bajaj Auto, M&M, TVS, Tata Motors. So it's just that Tata Motors didn't participate in the way we've seen in the other auto majors. But yes, it's comparatively in a better structure. And from very short-term trading perspective, I feel that 420 should be the key area that one should look at. It's the make or break area. Below that, the tone is also is like again going to turn sideways to negative. And otherwise, you'll see gradually, base formation or accumulation around the current levels. And in the next swing, it could be closer to around 460, 470 that it might test.
Right. Another stock that I want to talk to you about is Voltas in today's session. Again, we started pretty strong. It has cooled off, but that's the overall market action that we've seen. But in the last 5 trading sessions, it's clear upswing that we've seen in terms of a Voltas as well. Do you think still a good time to look at it because it's trading around levels of around 910? But from a market perspective, we see another 4 to 5% upside from here on.
Yes, the 4-5% is completely easy. Is just that we have seen this move, pretty sharp move in last 5 to 10 trading sessions. So from 750 to 915, almost like 5 to 10 trading sessions. So it's prudent that in case we wish to go long, wait for any consolidation. Because this zone close to around 870, 850 could be the area where it might take a breather after that recent up move, because we have long-term averages also as a resistance. So there's a possibility that it might consolidate around these areas, and then we can see the next swing towards 970, 980. So one should gradually accumulate, not buy at one go, and positionally you should maintain a stop at 850.
Okay. And any strategy that you would want to recommend for tomorrow in terms of Nifty as well as Bank Nifty?
See, I would recommend, in case if you're carrying stock futures, it's prudent that you buy 17,500 put for the 2nd March expiry, which is currently quoting at 100, as a hedge to those long trades, because the way the markets are like ending below the long-term averages, there's a possibility that it might drift further lower, and as we were discussing, that the previous swing low could be tested also. 17,500 is currently quoting at 104. So as a hedge, you can buy one at current levels and maintain a stop at 20. And in case if it's a naked trade also, then it's fine. You can wait for the target of around 220.
Right. Moving from there on to broader markets as well, we are seeing some bit of movement specifically in terms of auto ancillaries as well. What are charts indicating with regards to a Lumax auto?
See, Lumex, Hiral, I don't cover, so I won't be able to comment, and I can't, in fact, retrieve the chart also.
Okay. Apart from that, anything on a Thermax, the stock is seeing strong gains in today's session. A 7% move is what we are seeing right now. That's the kind of closing that's coming in. What would you recommend an investor to do with a Thermax?
Yeah, so this stock, is in fact among the top performing name in the sector. And when it comes to the price action, also we have hardly seen any major correction, in this recent dip in the mid cap and small cap basket. And in fact, the recovery is also very sharp. So with this rebound, the kind of volume action that we are seeing, possibility of retesting a low, highs close to around 24,000-2,500 levels is quite possible. So in case if you are holding this position, you should continue with 2040 as a stop loss, and intermediate target should be at 2400.
Right. Overall, there is pressure building up in terms of a UFlex over the last 2 to 3 trading sessions. Are you expecting that pressure to continue? And do you think someone who's holding a UFlex should book profits at current levels?
So I feel that damage has already been done. So exiting at current levels is something that I won't recommend. In fact, one can maintain a stop at 425 now, which is 20 points down from the current level. And in case if it's closes below the same, then definitely one should exit. In case of rebound, also closer to around 500, 525 could be the zone wherein it might again witness pressure. So around that area, definitely one should look for exiting in case if they're holding longs.
Right. Moving from there on, one last two stocks that I want to talk to you about is a Just Dial as well as a Raymond. What's the sense that you're picking up from a chart and a derivative perspective, specifically for a Just Dial and Raymond?
Just Dial, anyways, it is trading in a downtrend. So we have had couple of occasions wherein the stock witnessed a rebound but couldn't sustain the major averages. And if you see on the weekly charts, it's clearly showing you a clear downtrend. And after this recent attempt to reclaim those long-term averages, it has again slipping gradually lower. So in case if you are holding this stock, I feel that's a prudent opportunity to exit, because indications are in the favor that it might retest closer to around 535 twin zone very soon. For Raymond's, indications are like normal profit taking that we are seeing at present, and closer to around 1170 could be the area where it might take a breather. So fresh buying, one should avoid existing position. You may continue to hold with 1170 as a stop. And if it's a short-term trade, then use any bounce towards 1350 to 1380 area to exit.
Right. So these are few of the stocks that we've discussed, which have been movers in today's session, either on the upside or the downside, and a clear strategy that Ajit has given us as well in terms of Nifty as well as Bank Nifty. Thank you, Ajit, so much for joining us on the show and sharing those strategies with us overall.
Thank you. Thank you.
Thanks. So overall, if you see in terms of markets as well, a clear downtick. We've ended below the 59,750 mark in today's session. Cuts of almost around 930 points coming in terms of the Sensex, 1.5% lower. And if you see in terms of the stocks that have put pressure on the Sensex as well, it's clearly names like you have an Adani Enterprises, which was down 10.5 to 11%. Adani Ports ended lower, Uflex, Shilpa Medicare, as well as a rate gain. In terms of stocks which held up, you had a Coffee, IRB, Thermax. These were a few of the top gainers as well in terms of BSE. In terms of the Nifty as well, a downtick is what we've seen in today's session. That's all that we have in this session. Thanks for watching and have a great evening.